Okay, so we actually have we're going to continue the theme of the blockchain-based technologies. So we're going to learn a little bit more about DeFi, decentralized finance, and I'm very pleased to welcome Giovanni Lesna, the head of enterprise and partnerships at API3. Welcome to API Days India, Giovanni.
Hi, John. Thank you for having me back. It's great to be here.
Yeah.
Thanks.
So I think we heard from you at API Days Singapore, and learned a little bit about the ecosystems and how they're evolving. And you're going to home in on DeFi this time.
Yes. So, in terms of what I'm going to be speaking about, I think just to kind of inform the audience, I know a lot of the attendees of this conference are from the traditional financial ecosystem when it comes to traditional APIs and how those kind of work in the ecosystem. But in terms of how I'm going to present it is just kind of an in-depth look at what DeFi is. The DeFi ecosystems, the DeFi protocols, and what DAOs are, decentralized autonomous organizations, and then just a bit about API3 and how that's going to connect DeFi to TradFi, which is the traditional financial markets. So I'm just going to dive into it, John.
Can we do some troubleshooting first, because were you sharing your slide deck at the moment?
Yes.
Because I'm not seeing it on the screen.
Okay, let me just
can we try again and do that, because I think it was working a moment ago and it seems to have vanished off the screen. Just try and share it again.
Can you see it now?
No. Here we go. Yes, we can see it now.
Okay, excellent.
Okay.
I'll just backtrack then. Hi everyone, I'm Giovanni Lesna. I'm the head of enterprise and partnerships at API3. It's a pleasure to be back on API Days. This conference is obviously thought leaders when it comes to APIs, Web3, Web2. So it's just a pleasure to be here. Thanks, John. And I think in terms of the agenda, I've kind of positioned this this presentation around what DeFi is, just for the kind of traditional audience that is attending API Days, just so that they can kind of explore and understand what Web3 is, this kind of growing and emerging ecosystem that is it's growing exponentially. So I'm going to speak about what DeFi is, the DeFi ecosystem, the DeFi protocols that are out there that are built on top of blockchain applications, decentralized autonomous organizations or DAOs, and then just a little bit about API3 on how we're connecting DeFi or traditional finance to the DeFi ecosystem. So what is DeFi? So DeFi builds on top of these traditional financial concepts, and basically we add distributed ledger technology or blockchain technology, and we get DeFi. And the main DeFi applications are built on top of Ethereum, which is a virtual computer. And a lot of those are on Ethereum virtual machine chains. But if we just kind of backtrack once, looking at centralized finance or CeFi, these are traditional banks. And from how these work, they obviously govern and control people's assets in a centralized way. So these centralized entities act as these middlemen in facilitating transactions between borrowers and lenders, and obviously take a cut of the transaction. But what we're looking at is with DeFi, these are decentralized, transparent, and completely permissionless entities. And as you can see, that DeFi is basically challenging, the legacy capital and its monopoly that it currently has. And we're seeing that DeFi has the potential to kind of emancipate these unbanked and the complacent majority from this kind of traditional hold that the traditional financial system has. And I think when we think of banks or financial institutions, we think of corruption, we think of money laundering, we think of LIBOR scandals across the board. And obviously utilizing blockchain technology allows us to have more transparency in terms of what's going on in the background, how funds are being managed, how they're being transferred, etc. And that's why I've titled this the DeFi defiance, because we're seeing a lot of startups, a lot of entrepreneurs frustrated with the system and kind of innovating beyond that. And that's kind of created this DeFi movement. So in essence, it's disrupting this kind of centralized monopoly capital. And if we think of DeFi is in essence quite different to how we engage generally. So we obviously have bank accounts. We forget our passwords, and it's quite easy to reset because it's on a centralized database, or connected with APIs, etc. But the main kind of driver of DeFi is this kind of sole custodianship. So you as a user end up custodying your own assets basically on the blockchain. So your wallets and your private keys. And with DeFi, this is basically open source technology, these developer tools that allow, these new instruments and dApps to be built. So like you'll find that when you're kind of exploring blockchain and DeFi, there's a lot of these kind of jargon words and meme words that they used, but build or build in the traditional sense is where, these dApp developers go and build on top of these blockchain applications and kind of do hackathons, etc. But what we'll also see is DeFi allows, newly tokenized assets because it's built on blockchains, and blockchains have kind of smart contract abilities. There's kind of automation built in, and this kind of builds out new ways of transparency when it comes to the issuance of, say, securities or issuance of tokens or instruments, repayments, loans, and collateral. And the main mechanism for doing all of this is DAOs. So these decentralized autonomous organizations, which are in essence borderless companies that govern these protocols. But if we're looking at DeFi, in 2020, it grew from 690 million to 11 billion. And just a year later, we in excess of 100 billion in terms of value that is in this ecosystem. So it's really growing and quite exciting. But as it evolved, we'll kind of see that DeFi started off with DEXs, which are decentralized exchanges, and they use smart contracts to facilitate peer-to-peer transactions. IDEX, Ether Delta, for those that have been around for some time. But it kind of grew out towards lending, hedging, perpetual derivatives, options, everlasting options, which is a new innovation, stable coins. These are all kind of born out of the DeFi movement, with all of these being, digital bearer instruments. So if you have cryptocurrency, you basically it's a bearer instrument, so you can transfer it to someone else. It's not necessarily an IOU as a bank transaction would be, and that allows, smart contract interaction with censorship resistance built in, and obviously that's got pros and cons to it. So DeFi basically takes these legacy products that financial institutions create, and it converts them into some digital representation. And the word we use is tokenization or tokenizing, or wrapping these traditional assets onto the blockchain. And the blockchain brings this verifiability and immutability to the field. So as an example, if you're looking at gold bars, a kilogram of gold, you could, it's quite unattainable for someone to go and buy that. So what we could do is you could fractionalize gold ownership to 1 gram of gold equals 1 token. And in that way, you can also have greater inclusion. You can create a new kind of financial innovation. And we also have other cryptocurrencies that are backed by fiat currencies, which I'll get into. But the main crux here is that when it comes to DeFi, anything that is issued, traded, and settled, it's all done on the blockchain. So if we look at the traditional financial world, you've got central clearing houses, you've got like stock market exchanges, you've got broker dealers. There's quite a few agents and middlemen in the process. But this is all done in one single kind of transaction, all visible on the blockchain if it's a public permissionless blockchain. So DeFi elevates this trust. And just a caveat, obviously, performance can be impacted by, high transaction fees or network load. So it can lead to latent speed. But if you just generally look at it, it's cheaper and faster compared to the traditional financial system that we know. And I think DeFi also kind of grew in adoption and kind of claimed to fame with the yields that you were getting. So you could take your dollar, digitize it to a digital dollar, a USDC or a USDT, and then you could basically lend that out and get yield. and you were getting anything between 10 and 15% in the heyday last year. So if you're looking at the general financial market being, getting less than 1% on a deposit, 10 to 15% is very lucrative and very exciting. So I've just kind of visualized the traditional TradFi system versus DeFi system, and how do we get there and how does it work. So this is a quick one. So obviously we've got your savers and lenders. They then, use financial institutions to transfer that value to borrowers and investors, and financial firms take a cut by managing risk, because that's what banks are in the business of, is managing risk, and they take a reward for doing so, sometimes quite excessively. And then we've got your centralized exchanges, your Coinbase, Kraken, FTX, etc., Binance. These centralized exchanges are basically the fiat on-ramps and off-ramps to the traditional financial world, to your financial firms. And as you can see, all of these lines are basically connected by APIs. So open APIs, standards and APIs, they all facilitate the glue to this ecosystem. Super, super important. And with these centralized exchanges, you can then transverse into the DeFi system. And the DeFi ecosystem is all on the blockchain. So you got your wallets, your MetaMask, stablecoin protocols, USDC as an example, your decentralized exchanges, Uniswap, borrowing and lending protocols, decentralized insurance companies, and asset management companies, which I'm going to go into some light detail on examples and how these work, just for the curious. So in terms of the ecosystem, here's a lovely diagram that basically just kind of categorizes different projects in the space. So if you're really interested in prediction markets, which are type of gambling or sports betting, you can go and look at Augur. Derivatives, very, very interesting. Like if you're an active trader, obviously leverage trading comes with risk. So please, please be advised not to trade if you're not understanding what you're doing. But like DYDX, very interesting protocol where you can basically leverage trade certain crypto assets. Then you've got your DAOs, API3, which I'll explain, and a couple of others. And you've got your exchanges, Uniswap, which allow for peer-to-peer transactions in a trustless way using smart contracts. And then you've got basically your credit and lending platforms that you can take loans out. But we can just spend at least another hour on this table. So please go and explore this a bit further. And if you have any questions, please reach out to me. In terms of the exponential growth, we're looking at 300 million, users of crypto currently. It's predicted to hit 1 billion by the end of 2022. It may slow down given, the kind of declines in the prices over the last week, but we'll see. But that's according to crypto.com. We can see the total value locked, which is the equivalent to assets under management, it's $103 billion. But, with great growth comes also great risk. So we've also seen in the last year, $1.6 billion of exploits. That is due to the smart contract code or bugs in the code. So please be advised to do your due diligence whenever engaging in any blockchain or DeFi protocol. dapradar.com, this is quite nice, where you can kind of have a look at the different kind of projects, what they're doing, what networks they're on. You can also see the market cap. So we're looking at billion-dollar applications. Where have you last heard of billion-dollar applications that have been spun up in between 2 and 3 years? So super exciting, super interesting. And then we go through to your DAOs. I did a whole presentation at the API Day Singapore conference, which you can kind of delve into, but I'll just give you the quick gist of it. So a DAO, decentralized autonomous organization, is kind of a multi-organizational network structure. So think of like hub and spoke, but very connected and interconnected. You add blockchain technology, you add the smart contract functionality that blockchain brings. You add the wisdom of the crowd, and you subtract away these silos or these kernels of organizational inertia. And what you actually have yourself is a borderless company. And this borderless company has secure treasuries on the blockchain, inclusive voting rights, fully transparent, and no intermediaries. And they also kind of boast a new meritocratic organizational design. So depending on how good you are, you find your niche in the organization, you add value, and you continue to work there from wherever you are in the world. And we've seen with even the API economy, and I'm sure this conference, API Days, has grown substantially because we've opened up APIs, we've connected with partners. We've seen Uber, we've seen Airbnb. These are just basically API companies that have just risen out of nowhere. And this is all due to this kind of community building with your strategic partners. And now we take it a layer further, where we build communities of meaningfulness around economic collaboration, and that gives these DAOs a new edge when it comes to strategic advantage. So I believe that Web3 is the next phase of governance. So it's the next organizational structure, if one could say. And we can already see $11.3 billion locked into these digital borderless companies. There's 4,800 of them, 1.7 million governance token holders that have been involved. And if you're interested to read more, I've provided some links. This PowerPoint will be available post this session. And then in terms of the DeFi protocol, so what I've done is I've just got into a couple of those in the first table. So if we're looking at open lending and borrowing protocols, we know that these are essential to any kind of financial system. So looking at how you can borrow, you can take your crypto assets, you can use those as collateral, and then you can basically take out loans. And if it meets a certain liquidation threshold, then obviously it liquidates your thing, but your loan. But basically, it's a bank on blockchain governed by a DAO. A DAO kind of decides, the disputes, it votes on the interest rates, etc., and the collateral and money market rules. And if we look there, the little ghost is Aave. We've got MakerDAO and Compound being those as examples. Looking at the decentralized derivative of perpetual markets and insurance markets, we know that a financial ecosystem needs risk management tools. So you can see that these startups, these entrepreneurs are building all of these building blocks that are in essence creating a completely new financial ecosystem, similar to what we know, but based on blockchain technology, with the added savings in terms of transaction fees and more transparency. So we're looking at these where managing risk, pulling in the wisdom of the crowd. Like I said, synthetics and DXDY would be your perpetual and synthetic assets, and your Nexus Mutual would be your insurance, on-chain insurance for in the event of any kind of smart contract hacks or any kind of exploits, or potentially if a stable coin loses its peg, you can take out insurance for those. And then exchanges and wallets, we've got MetaMask, the little fox over there. We've got Argent, we've got Phantom. Those are quite well known, and these allow us to store value and convert value. So think of it kind of as a decentralized banking account that we can store things in, and then we can actually exchange them. So you've got Uniswap and PancakeSwap. You've also got SushiSwap, and these allow these kind of P2P transactions, but also with a smart contract involved. So it's basically a peer-to-contract exchange, and they help us store, send, and receive tokens or cryptocurrencies. And with your stable coins, stable value is quite important. We can't just transact in a fluctuating currency. So we've got your stable coins, an array of different ones. We've got your crypto collateralized DAI. We've got fiat collateralized. So in other words, one Circle USD dollar is backed by one actual US dollar. And then we've got UST, which is Terra Luna's algorithmic coin. And I'm sure for those that are interested, there was a major event that happened in the last 48 hours where it lost its peg, something akin to the East Asian crisis that happened, where a lot of these emerging markets lost their pegs. But in essence, this allows for spendability. It allows for reduction in volatility. But generally, you should be having a less than 1% volatility when it comes to these stable coins. And they're also used as an off-ramp into fiat currencies. And then just looking at API 3 as a DAO, just to kind of tangibilize these concepts a bit further. Basically, API 3 provides trustless governance when it comes to data products. So if you look at that picture of the little triangle there, the API 3 DAO, in essence, works with sub-teams. These sub-teams are then voted in depending on what they're going to be accomplishing in a quarter, and they go out and deliver value. The API 3 stands as a kind of risk protection pool in the event of anything going wrong with the technology. But I'll explain a bit more about API 3. So API 3 is a decentralized autonomous organization. We basically, the worked on connecting APIs to Web3. So that's our main business. And we saw that there were current limitations with current blockchain predecessors that are out there that are data oracles providing this in a third-party approach. So we kind of innovated and provided a first-party approach where we make an open source technology stack available to Web2 enterprises and data providers so that they can actually monetize their data. And obviously, we've also built this in a blockchain agnostic approach because there's not going to be one chain to rule them all, but more multi-chain world, and also cloud agnostic in terms of how that operates. And we have some notable investors that have invested into this project. But in terms of the problem that we're solving, understanding now that DeFi has this kind of web of data flows. Basically, there is something called the Web3 API connectivity problem. So you need to, in essence, be able to connect to real world data sources, but blockchains, the way they achieve their consensus, they need the data to be on the chain first in order to ingest that into their applications. And that's what a DApp is, a decentralized application. And I think a lot of people end up forgetting that trusted data input is just as critical as the encryption function and the consensus algorithm that is what blockchain is kind of known for. So what we've done is we provided this API gateway, completely open source, free to deploy for the AirNode product, which I see the previous speaker was mentioning the request response. So this is our request response product. And I've also just provided a link there, the differences between the first party and the third party approach. But notably, because it's a first party approach, it unlocks additional kind of use cases. But one of the main ones is the GDPR compliance from a data protection perspective. I've also just provided an example of visualization of how our data feeds would work, where we'd have a Web2 source. They would want to monetize their data. We would connect the AirNode and the AirKeeper to that infrastructure, and they'd be able to then monetize that to Web3. But a DApp, as an example, would want to know the gold price. They would connect it to the AirNode. The AirNode is a serverless Lambda function, so it doesn't store any data in there. It queries the market data provider, brings that data, writes the answer on chain, so the DApp can actually consume it. And then what happens is periodically we have a look at a deviation. If there's a deviation between the previously written price and what it is off chain, the data then re-updates. So you can just think of this as a continuously updating, a continuous flow of data as a data feed. And this is quite a lucrative market to be in if you have any market data or any streaming data that you can monetize for Web3. And we also provide API3 as a DAO. We provide these risk protection or loss coverage services incorporated into the subscription model that we have. But enough about API3. I guess, the most important thing is connecting TradFi to DeFi, right? So API is the glue of the ecosystem. And, we help facilitate that in connecting real world data. We also just can plug and play into any REST API that you have. And it's a quick 15-minute integration. So we work with mainly, existing cloud providers, and this allows you this new monetization aspect. So you can kind of think of API3 as this fabric glue that allows you to basically connect to DeFi, to the ecosystem, to monetize it and to make things work. And then in terms of other topics, I really love API Days, such a great team, such great speakers and great content. I've also just made these previous talks available to you. So if you want to kind of understand open insurance, a little bit more about smart contracts, the history around smart contracts, the API economy and the financial services, and the most recent one about decentralized autonomous organizations, please have a look at these links in the PowerPoints. And then for the vanguards out there, I know there's a lot of you that are sitting here listening to this thinking, gee, I need to kind of explore this emerging market and this emerging technology space. I've just provided a couple of links here that can kind of give you a bit more, fill you in on like what's a DAO, the trending dApps, the DeFi exploits that happen, how much it was for, also what Web3 is, etc. And just to conclude, and then I'm going to hand the mic back over to John for any questions. We work with Fortune 2000 companies, so we'd be happy to work with you to help you navigate Web3 and see how we can help you monetize your data. Or alternatively, if you're creating a large dApp and you need the data, we can assist you with connecting. We have over 150 different data sources, and we're also working with very large market data providers, forex providers, etc. in the space. Over to you, John.
Thanks very much, Giovanni. Pleasure having you back at API Days to to explore these Web3 concepts. I actually have a question, and it may be a little specific, but I think you're well qualified to answer. You're the most qualified person I know to answer it. And and you mentioned early in your talk about money laundering, and on the one hand, I can see how putting things on the blockchain um, can make transactions more transparent if people can see what's on the blockchain. But we also hear a lot in the news about uh, fraudsters and money launderers using blockchain-based cryptocurrencies in order to uh, hide their gains. And so there seems to be this sort of dichotomy here. Why would something so transparent be used for illicit purposes? And I guess what's prompting that thinking is that anybody who works at a bank has to learn about money laundering. We have to do a test each year. It's
Mhm.
required by the regulators, and the the basics of money laundering are placement. That is, some dirty money gets placed into the banking system, and then there's the the criminals layer it. That is, they create a whole lot of other transactions in order to confuse the trail of money, and then they eventually bring it back into the financial system again to absorb it into a real asset, maybe buy some real estate or put it in a bank account somewhere. Uh, so it's not that it's not transparent. It's just there are so many transactions across different
Mhm.
platforms that is hard to for law enforcement or to the bank's own money laundering team to track all of this. And so by the time they have actually traced it, the criminals are gone somewhere else. So how do how do you have both the transparency and the speed of tracing in um, a it's not one it's not one system. Criminals may
Yeah, yeah,
cross
no,
several systems in the blockchain ecosystem in order to cover their tracks.
yeah, no, I hear you. But I think the reason for that is obviously blockchain is pseudo anonymous, so that means that it's partly anonymous. I think the benefit is we only see the negative aspects in the news, right? That 1.6 billion hacks have happened. However, we've also seen that some of this money has been recovered. So, as an example, there was a Bitfinex hack a couple of years ago, and that it was in excess of $2 billion. The FBI was managed to trace down those funds on the blockchain because everything is basically traceable. And then we've also got kind of firms that have come up, Chain Analysis, as an example, that do forensics on these kind of like activities. They also have kind of sanction lists on blacklisted wallet accounts. So it is becoming more difficult for these kind of fraudsters to basically launder this money because everything is tracked on the blockchain. So I do think that as time goes by, there's going to be I guess with these DeFi protocols, they're going to have to start complying to a certain minimal degree of, like, say, sanction list wallet accounts, etc., on their front end, and maybe do some geofencing around the users that utilize their platform. So I think we are seeing kind of developments happen, but I think there have been notable cases where they've actually tracked down, like as an example, the Quadriga hack that happened in Canada. Um, in essence, what happened there was they ended up tracing certain transactions and understood what was going on, where the money went, and what happened, and they kind of came to a conclusion that it was kind of gaming the system without putting it on the blockchain. So I think the blockchain allows us that kind of track and trace ability. And I think we are seeing like FATF out of the United States, which is a regulatory agency. We're seeing all of these, the currency controller of the United States, etc. A lot of them are putting in these travel rules, etc. In the EU, actually, now that I'm saying it, in the EU, they're also kind of looking at reporting unsolicited wallet interactions. So if you have a wallet on a DeFi application, not a centralized exchange, and every time you kind of interact with that wallet, you'd have to prove that you own that wallet, providing the KYC in order to cash out the money. So I think that's kind of the way it's going. But as these kind of criminals get smarter, they'll find different ways around that.
Well, I guess the innovation usually precedes the science. So the what I saw from your presentation is that a range of different tools to help analyze blockchain, but perhaps the controls that every financial institution needs to have around fiat currencies needs to be strengthened, and I think probably also the speed. It's not necessarily that things aren't transparent, but how do you get to the heart of the and trace these things as quickly as possible across perhaps different platforms. But thanks very much for sharing that perspective. I've certainly gained a better understanding of how the space is evolving.
Perfect. Thank you, John.
Thanks very much, Giovanni.